Your gains just got wiped by a failed Treasury rescue. The 30-year yield is up 9 basis points because the government couldn't sell its paper. Friday, August 21st, 2026. Today's agenda: the bond rescue lasted one day. Stocks slid, yields rose, crypto ran. $4 gas showed up in Walmart's numbers. 3 dates that decide the next 2 weeks. Now the other half of the story. On Wednesday, the Treasury said it would at least double its buybacks of long-dated debt. By the Thursday close, the market had handed every basis point of that back. The 30-year yield settled near 5.25% on Thursday, up more than 5 basis points. The 10-year ended near 4.7% on Thursday, its highest since early last year. The reason matters more than the level. In the operation just before that announcement, the Treasury offered to lift $20 billion of paper. Dealers sold it barely $2 billion. There was no queue of sellers to relieve, which means a bigger cap is not plumbing. It is a signal, and desks read it as discomfort, which is why the relief lasted one session. The deficit is tracking above last year, and companies are borrowing hard to build data centers, which means corporate paper competes with Washington for the same buyers. Why should you care about a 30-year bond? Because mortgage quotes follow that curve inside a week, and because the same yield discounts every growth stock you own. Watch for the first enlarged operation on September 9th. The risk is that it lands into the same indifference. If 5.25% still holds by then, expect the toolkit to be priced as bluff. A second failed intervention would leave Washington short of easy options. Here is why Walmart's numbers hurt your grocery budget so much. Here is the Thursday scoreboard, fast. The S&P 500 fell about 0.9% on Thursday to 7,641. The Nasdaq lost a full percent on Thursday and finished at 26,067. The Dow gave back 703 points, or 1.3% on Thursday. This was not a megacap story. The Russell 2000 slipped 1.3% on Thursday too, which means small cap sold off with everything else. The volatility gauge climbed 7.5% on Thursday, which means hedging got dearer without anyone panicking. On the week, the S&P is off almost 2%, and the Nasdaq is down 2.5%. The dollar index sat just under 99 on Thursday, after its steepest one-day fall since March. Watch for whether it holds that bounce by Friday night. Gold and silver both ended Thursday close to flat. Brent crude closed above $93 a barrel on Thursday. Bitcoin is trading near $74,500, almost 20% on the week. Money left the assets that need cheap borrowing, because borrowing got dearer again. That is what a rate-led sell-off looks like, while growth data holds, which is why you should expect rotation rather than a rush to cash. There's a second piece to this. Walmart beat profit expectations and raised its full-year outlook, yet it recorded its worst day since May 2022. Adjusted earnings came in at 81 cents a share versus 74 cents expected. Did you see the drop? American same-store sales grew only 2.6% against a forecast of 3.7%, the slowest pace since 2020. The stock fell roughly 9% on Thursday, erasing nearly $90 billion in market value. Finance chief John David Rainey noted that fuel prices crossed the $4 mark this month. Shoppers began making trade-offs because gasoline is a price households recheck weekly. Regular unleaded has risen from $2.98 pre-war to $4.10. Average spend per transaction grew just 1.1%, compared with 3.1% a year earlier. This indicates the Iran premium in crude landed directly on Walmart. It waits for no inflation data. Price pass-through runs about a quarter ahead of official numbers now. Walmart is cutting prices on 11,000 items because failing to do so risks losing the trade-down shopper segment they have already captured. Deere moved in the opposite direction Thursday, jumping 9% driven by data center demand. Watch whether those rollbacks defend comparable sales next quarter. If gasoline falls back under $4, the problem may resolve itself. July Federal Reserve meeting minutes, released Wednesday afternoon, read rate hiking. Several officials judged that raising interest rates would likely be necessary if inflation did not decline further. This represents a committee arguing about rate hikes rather than cuts. Consequently, soft data now buys time for rates to stay high rather than triggering a cut. The vote to hold rates at 3.5% was 9-3 against a move by Kashkari, Logan, and Hammock, who wanted immediate action. Futures pricing suggests the odds of another pause next month are near 65%, up from 36% over the past month. This shift is driven by soft jobs data, meaning traders have quietly faded expectations for hikes. Chair Kevin Warsh has not endorsed this rate-cutting change yet. He told reporters that the Fed is not constrained by market prices. He speaks at Jackson Hole on August 27th. What will you hear there? Consumer prices ran at 3.4% in July, against 2.4% pre-war. Expect that gap to frame every question Warsh takes during his upcoming appearance. Here is the single most important view I have for your portfolio today. 3 dates, then 1 call. Monday brings Besant's press conference on Iran, and what matters is whether sanctions reach buyers of Iranian crude or only Iranian entities. August 27th brings Warsh to Jackson Hole. September 15th brings the Senate the crypto market structure bill. It needs 60 votes in a chamber holding 53 Republicans. That last one is where I think the risk sits. Bitcoin has just repriced almost 20% on the week on a bill that has not passed. Roughly $3 billion of trapped shorts were the fuel. If the cloture vote fails, most of that move goes back, because a squeeze with no spot demand behind it has nothing to stand on. Both of this week's big moves were driven by one input, the price of long-dated money. What would prove me wrong is the fund flow. If the $517 million day clears into a steady week of buying, the bid is real, which means the vote becomes a bonus. Watch for that flow daily, not the price, because flow is the one thing that cannot be squeezed. Your position size should reflect which of those two you are betting on.